Welcome to TalkTickers. Today we're diving into Hyperfine's latest earnings call. We'll unpack their first quarter performance, dig into what management said, and, talk about what it might mean going forward.
Yeah, so kicking things off with Q1 2025, Hyperfine brought in $2.1 million in revenue. That came from selling 6 systems, and they mentioned a pretty strong average selling price for those.
6 systems, okay. And how did that translate into profit?
Well, gross profit landed at $0.9 million. That gives them a gross margin of 41.3%, which is actually a slight improvement compared to last year, same quarter.
Okay, a slight uptick there. But what about the bottom line overall? Net loss?
Still in the red, yeah. Net loss was $9.4 million for the quarter. That works out to about $0.12 per share. But importantly, it is better than the loss they posted the previous year.
So improving, even if it's still a loss. What about cash burn? That's always key.
Right. They seem to be managing that better.
Yeah.
Net cash burn, if you exclude financing, was $10.1 million. And that's a 16% reduction from the prior year. So decent cut.
16% reduction, okay. And their cash reserves, how much runway do they have?
As of the end of March, they had $33.1 million in cash and equivalents on hand. That number includes about $6 million they just raised from a recent offering.
Okay, so some fresh capital in the bank. But I heard something about guidance.
Yeah, they did revise their outlook for the first half of 2025. They're now expecting revenue somewhere between $5 million and $6 million for H1. That's down a bit, and they said it's mostly because a few anticipated deals with academic institutions fell through.
Ah, okay. So some near-term bumps. What about the full year, though?
They're actually sticking to their full year 2025 growth projection. They still anticipate growing revenue 10% to 20% over 2024.
Interesting. So they expect a stronger second half to make up for the first.
Seems that way. And they also expect the full year gross margin to improve significantly, targeting 47% to 50%.
And the cash burn for the full year, did that change?
Yes, and for the better. They significantly lowered the forecast for total cash burn, now expecting $25 to $28 million for the full year 2025. Big reduction there.
Okay, so let's dig into the why behind some of this. You mentioned lost academic deals.
Exactly. That seems to be a key point. They hit some headwinds in Q1 with these large academic institution deals. These often rely on grant funding, and management kind of pointed towards the current political environment may be affecting that grant availability.
Okay, so that's impacting their traditional U.S. hospital-focused sales.
It seems so. And as a result, they're making a conscious shift, especially this first half of the year. They're moving away from being primarily reliant on those U.S. hospital deals.
So a strategic pivot then. Where are they shifting focus?
Diversification is the key word. They're really pushing to grow revenue across hospitals, yes, but also the outpatient office setting and international markets.
Right, spreading the risk and looking for new growth avenues. How's the office push going? That sounds like a newer area for them.
They reported making significant progress there, getting ready for the launch. Several of their pilot sites, these office-based practices, have apparently achieved IDTF accreditation. That's Independent Diagnostic Testing Facility.
Okay, and that's important for billing, right? For getting reimbursed.
Crucial, yeah, for billing Medicare and Medicaid. So these sites have started scanning patients and are working through that CMS reimbursement process. Also, their big clinical study, neuro-MMR, the one comparing their portable MRI to conventional high-field scans in neurology offices, is apparently enrolling patients faster than planned.
Oh, really? Faster than expected?
Yeah, they said it's about halfway done and should wrap up by the end of Q3 this year. And they've also been training their field teams specifically on, selling into and supporting this office market.
Sounds like they're laying some serious groundwork there. What about the tech itself? Any upgrades coming?
Yes, definitely. They're on track for clearance on their next-gen software in the first half of the year. Commercial rollout for that is planned for the second half.
And wasn't there talk about the core system, the soup system tech?
Right. Another generation of that is also expected to get clearance and launch later this year. And this is potentially a big deal. They're talking about a step function improvement in image quality.
How much of an improvement?
They're saying it could approach the quality of conventional 1.5 Tesla MRI systems.
Wow, okay. If they can pull that off, that could really change the game, couldn't it?
Absolutely. Management thinks this level of image quality could really accelerate adoption, make it easier for new folks to learn, and just broaden its use cases quite a bit.
So even with this office push, they're not abandoning hospitals?
Oh, no, not at all. Hospital expansion is still very much part of the plan, especially in the emergency department for stroke triage. Time is critical there, and MRI access is often limited.
Makes sense. Any data backing that up?
Yeah, they mentioned data from their Ashan PMR study supporting its value in ischemic stroke cases. And another study, Option PMR, just finished enrollment. They're also really trying to highlight the economic benefits for hospitals, showing data on how it might lead to more conventional scans downstream or save costs overall.
And are hospitals buying in?
It sounds like there's growing interest. They mentioned an increase in deals involving multiple units within their hospital pipeline, so not just single system sales.
Okay. And the third leg of that diversification stool, international.
Still seeing strong interest there. Europe, Middle East, Asia. India is the big one they're targeting for market entry, still expected in the second half of 2025 after regulatory approval.
Is the international focus mainly hospitals too?
Currently, yes. It's heavily hospital-based internationally. Their distributors are working the pipeline, and early implementations are apparently showing good clinical activity. They're also trying to set up centers of excellence and user networks abroad, kind of build that community.
All right, let's swing back to financials. The reduced cash burn, how are they achieving that? Just selling more?
Not just sales. It's a combination. They went through a reorganization recently, specifically to cut operating costs. Plus just a more disciplined approach to spending overall, it sounds like.
And that $6 million financing helps too, I imagine.
Definitely. It strengthens the balance sheet and, crucially, extends their cash runway. They now believe they have enough cash to last until the end of 2026.
So nearly 2 years of runway. That buys them time to execute on these new strategies.
Precisely. And it contextualizes the revenue guidance revision for the first half. It reflects those lost grant deals. But the expectation is still for a strong second half rebound, fueled by the new tech, the office launch, and international growth.
And better margins in the second half too, you said.
Yeah, expecting gross margin to improve significantly later in the year, well above the first half levels.
What about external risks like tariffs? There's been talk.
Yeah, they're keeping an eye on it, monitoring the government chatter and actions. But for now, their baseline assumption is no material impact on their 2025 guidance. They feel they have enough inventory on hand to weather potential issues in the near term.
Okay. And the sales cycle? Still long for hospitals.
Yes, that continues to be a factor in the U.S. hospital market. Often takes a year, maybe even a year and a half to close those deals.
That's a long time.
It is. But they emphasize the hospital pipeline itself remains strong, robust, and they've brought on a fair number of new sales reps who are apparently getting up to speed and preparing for the new tech launch.
What about the sales cycle for the office setting? Is it quicker, different economics?
Definitely different dynamics. Implementation is one aspect, and payment preferences differ too. Offices seem much more interested in pay over time or financing models compared to hospitals making large capital purchases.
And does it make financial sense for a typical neurology office?
It depends heavily on their MRI referral volume. Hyperfine mentioned that average neurology offices refer maybe 500, 600 patients a year for MRI. So they're trying to tailor the deal structures, the transaction models, to fit different office sizes and how they prefer to pay.
Okay, so putting it all together, what's the big picture for someone tracking Hyperfine?
It's really a story of transition, I think. They're facing some near-term challenges, mainly in that traditional U.S. hospital grant-funded space, but they're actively pivoting, diversifying into offices in international markets, aiming for more stable, higher growth.
And the new tech is key to that?
Potentially, yes. That improved image quality could be a major catalyst for wider adoption. So success really hinges on executing that office launch, getting into India smoothly, and demonstrating the economic value in both hospitals and offices.
And the improved financial discipline helps underpin all of that.
Exactly. The lower cash burn gives them runway. But you still have to watch those long hospital sales cycles and, the potential for more shifts in grant funding. Those are the risks to monitor.
All right, fascinating stuff. Now, let's shift gears to our This Is Not Financial Advice segment. Time for some creative, maybe slightly out there ideas based on today's deep dive.
Okay, let's brainstorm. Here's one possibility, playing off that office neurology push. We know Hyperfine's going hard after neurology offices. They're reporting good pilot results, fast study enrollment. So what if you considered companies that provide ultra-secure, IPA-compliant cloud storage, specifically for medical images, tailored for smaller practices?
Like the data infrastructure needed if these offices start generating lots of MRI scans.
Exactly. If Hyperfine's portable MRI really takes off in these smaller neurology clinics, they're going to need robust, scalable, secure ways to manage all that imaging data. It's not a direct bet on Hyperfine, but on the ecosystem that might grow around their success in that specific outpatient market. Could be a growth area for niche tech providers.
Interesting angle. Playing the supporting cast, essentially. Got another one.
Okay, let's look at the India angle. They're targeting market entry in the second half of 2025. India's huge, complex healthcare market. Lots of potential, especially in areas with limited access to advanced diagnostics.
Right. Infrastructure can be a challenge.
Precisely. So here's the wilder idea. What about looking into Indian companies that build and operate, like ruggedized mobile medical vans, maybe even solar-powered ones? Imagine these vans equipped with Hyperfine's portable MRI, bringing diagnostic imaging to rural or underserved regions with unreliable power grids.
Mobile MRI units for remote areas, powered by Hyperfine tech.
Could be. If portable MRI gains traction in India, there might be significant demand for these kinds of mobile diagnostic solutions. Definitely higher risk, higher reward. It depends on Hyperfine penetrating the Indian market and these mobile unit providers being able to scale and execute effectively.
Two quite different but plausible scenarios there. So to wrap up, Hyperfine is clearly in a dynamic phase. They're tackling some immediate headwinds, but have a clear strategy for growth through diversification offices, international, and through advancing their core technology.
Yeah, the office market progress and that potential India entry are definitely key things to watch in the coming months. The image quality improvements could also be really significant if they pan out as described.
Absolutely. And remember, everyone, this discussion was based on the information from Hyperfine's earnings call. It's not financial advice. Always do your own homework, your own research before making any investment decisions. We definitely encourage you to look at Hyperfine's filings, track their progress. What do you think about their strategy shift? How big a deal will that better image quality be? We'd love to hear your thoughts.